Silver, best asset class in Q1 2017, and still looks good. Udo, let's talk about silver. And silver, well, it looks like, it was the best performing metal in Q1 2017. What happened?
Very easy. It's been too cheap.
Yeah, that's for sure.
It's not just silver, it's also gold and copper. They had quite good first quarters this year. It's not a tremendous performance, but I think it says something if silver has been the best asset class in the last quarter. And I think the prospects for this and coming years are still quite very good, actually.
Yeah, definitely. Let's have a look on the demand side. As we see here also, a lot of silver is consumed. Solar is the big theme, or one of the big themes for silver. What's going on there?
Absolutely. We probably use or need about 600 million ounces of silver till 2020 for, especially for the green energy side, on the photovoltaic side, as well as on the production of plastic and chemicals. And we produce only roughly 800 to 900 million ounces. So 600 million ounces is quite a lot of demand, what we will see in the next couple of years, and peak's going to be in 2018. So there's a big physical silver demand waiting for us. And
and the supply side?
Supply side is not really growing. You see, since 2010, we are more or less flat on the production side globally. And if you put on the numbers from the Silver Institute, you have a net balance deficit for the last 10 years continuously.
And it's on an annual basis, the deficit, right?
It's on an annual basis.
That's crazy.
If you add that up, 10 years, you receive 1.3 billion ounces that are missing in this balance sheet. So somebody is short, or some institutes are short 1.3 billion ounces that needs to be delivered in the next couple of years.
Or covered, at least.
Or covered, and to the additional demand we see from the green industry, from the technology, from the nanotechnology, there are more and more uses for the silver side, and still somebody who needs to cover
demand.
1.3 billion. So that's a lot of demand, future demand, that's waiting for us.
Great. So I think after knowing all that, let's have a look at the real big picture. I mean, we have a 40-year chart you brought with you, and that looks like a nice bottoming out with a start of a new trend or new cycle.
Yeah, I borrowed that chart from James Turk, who is really a close follower to the silver side, and I think it shows very nicely this decade-long cup and handle technical pattern formation with a bottoming about last 30 years, and then a peak, two peaks at $50, and now a strong, tough correction last couple of years. But now last year we could break above this $18. That's still kind of $18 an ounce, still very important support resistance line that's going to be fought. But this handle is information, and I think from this pattern on, the next target would be the old highs at $50, and I think
that would be nice.
That would be nice, but that would not be the end of the story. So
it's just the first indication.
Just first indication for long-term investors, and I think even short-term, this first quarter already showed silver is picking up, and I think the fundamentals are sooner or later they will come back, and that's something we will rely on.
Perfect. So I mean, if silver goes, let's say, to the 25 and then to the $50, that's of course also positive for the silver miners.
Absolutely.
So silver miners versus silver, what's on there?
We don't invest directly in silver or gold. We invest in silver miners or gold miners. And you saw last year how if the tide changes, how quick the recovery can go. And you see with this chart how dramatic the recovery of the silver miners compared to silver has been. So many of these silver miners really exploded last year.
Like
from the lows.
Devil Silver, for example. I mean, they went like from January to April 4 or 5 times higher.
4 or 5 times, 4 or 5 baggers. And First Majestic. And there have been some real strong performances. And after such strong performance, it's kind of natural that you see a consolidation, what we see this year. So at the moment we are on a consolidation basis, same with the gold box index. That's going to be consolidating on these levels, the strong gains we had last year's, but mid-long-term outlook is still positive for us. And,
great, and you brought one of your favorites with you, Fresnillo, which is also quite close in a good relationship with Mag Silver in Mexico. Yeah, they bring their mines into production 2018. So what's up with Fresnillo?
Yeah, we like both names. We have quite a variety of silver producers in our fund. We have about 12% of our fund volume is in silver producers, and that's quite well diversified. But also one of our long positions is Fresnillo. It's a Mexican London-based company. It's, I think, the biggest poor silver producer worldwide, and it's been a FTSE 100 company. And yeah, I think the chart also shows how the price tripled from the lows from 2016. And now are consolidating on an upward slope, and I think the prospects are still good for further price increases. And we stay bullish on gold's little brother, silver, as well.
That's a nice final word. Udo, thank you very much. Bullish on silver, the little brother, silver bullish and the little brother of gold. I like that. Thank you very much for the interview.
Thank you.
Yeah, ladies and gentlemen, that was Udo Sutterluety, the co-fund manager of Sunares Natural Resources Fund. He's managing the fund together with Colin Moore from London, his partner there. And yeah, he's bullish on silver, so as we are. And silver, as the little brother of gold, is on the run through solar, through nanotechnology, through technology applications, of course. And we are still missing 1.3 billion ounces of silver from the last 10 years. So where are they? It's getting interesting. $50 is his first big target, so is mine. And we like silver a lot. Thanks for watching us. I'm your host, Jochen Steiger from Commodity TV in partnership with Dukascopy TV. Thanks and bye-bye from Geneva.